The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 15th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, 877-927-6648. That's the number you dial in. Of course, you can dial in at 727-445-1044. You can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading out at 20,905. That's up 67 points. S&P trading at 2376, 11 points to the upside. NDX 100 up 12 points. NASDAQ Composite up 20. Russell's up 13. That's the big mover of the day, up nearly 1%. Semis are just basically unchanged. They're up 2 points. We'll call that unchanged. New York Stock Exchange, Wilshire, up a half a point. The trannies are up 0.7%. Gold's back $3. Silver's down 2 pennies. We'll call both of those pretty much unchanged out here. Light sweet crude up 75 cents. Lead the charge here dollar-wise to the upside. You got Intuitive Surgical up 7.45, a little over 1%. Bio-Rad Labs, I think that's the second or third day in a row for Bio-Rad. That's up $7, 3.5%. Bluebird Bio up $5. Anthem up 4. Regeneron Pharmaceuticals up 4 and change. Coherent up $4. Coca-Cola up another $4 today. To the downside, it is AutoZone taking it on the chin, down nearly 2%. That's $12 to the downside. FTD companies, is that the florist guys? They're delivering red roses today, down 20%. They seem a bit wilted. That's off about $4.78. Actually, I don't know if that's the same company, but I'm thinking it might be. NetEase, that's off $4. Alliance Data Systems down 4. Chipotle off 3. Tesla off 3 as well. So where do we want to begin? Hey, probably none of this stuff matters until, I don't know, 2:30, 2:45, right? After the Fed releases what everybody anticipates, and then it's going to be the Q&A period. So that's between, probably 2:30 to 3:15-ish, something like that. But let's go see what the markets are communicating to you and I, right? Let's just kind of shelve what we think the Fed might do. Let's just take a look at what the market is communicating to you and I at just past 1 o'clock in the afternoon. How is that? Now, in order to do that, that says, hey, we've got to go back to a few days ago. So let's do that. Remember, when we saw the New York Stock Exchange, that is the, in fact, what we can do right now is we can just go ahead and, I'll get rid of the trend line. But we're going to do this. We're going to do this live on TigerTV. We're going to go ahead and turn that yellow line, which was a question mark. Will it work again? And now you know the answer is yes. Of course, you and I have gone back and we've proved it that it works so often, so gosh darn often that you cannot ignore it. What does that mean, Steve-O? That says that as that advanced decline oscillating got down below minus 150, and as soon as it ticked up, that was an indication that you were going to see the market bounce. You might have said, how, why, doesn't make any sense. Well, first it's that over. So you can only, you go into a pool, go jump into your pool. Now, many of you probably can't, but come on down here to Florida, we can still do that. It's only like 70 degrees or so. Yeah, a little bit cool. But just jump into the pool with a nice big, blown up ball, and you try and push that thing down as far as you can. You're eventually going to get to a spot where the ball is going to win, and it's going to bounce to the upside. This is, in essence, the ball and pool chart that we're looking at for the New York Stock Exchange. Now, it's not yet above zero. So the reading here is $68.03. Wonderful move that we've seen in the market thus far at 111, but it is still sellers that are in control. So how do I interpret this? Look, on a normal day, if I wasn't really worried about we have this Fed announcement and what it may or may not mean, our conclusion would be, if you were interested in shorting, not so fast. You want to wait till this indicator gets up to the red line, different red line than you and I normally look at, get up to the zero line, and then turn down from there. That would then signal the next leg to the downside. Bottom panel of my screen out here happens to be your favorite and mine, sort of our favorite. It's our favorite child, but at this stage, not allowed into our house until it gets its act together. You know what I mean out there? That's referring to the volatility index, the spot volatility index. Right now trading out at 1173, which is below the 50-day exponential moving average, which is 1188. So in essence, it's set up in kind of gobs of liquidity, and it's set up for prices to continue to move higher. So if not for the Fed at 2 o'clock, our reading would be that the market's not going to do the kibosh to the downside, not just yet out here. So maybe the way the market reacts is relatively muted. We continue to see a little bit of a push higher before the next leg to the downside begins. Now, where else is that message coming from? How about this chart right here? Let's take a look at right from weakness. We can understand strength out here. And this is actually the cool thing about the market over there, especially the Russell 2000. That's, by the way, what I was referring to as far as weakness, as far as the depth of the retracement that we had seen thus far from its March 1st time frame out here. And what we can see is over the course of the last 4 days, really, we can see two of your favorite candlesticks out there to identify a bottom. Now, we're looking at the two hammer candles, one that occurred 4 sessions ago. This is in the IWM, one that occurred yesterday out here, complemented by the same hammer candle that formed inside the Russell 2000 equity futures contract. So this says, hey, it's really trying to hammer out a bottom. However, this red line, different than the calculations involved with the one that we looked at in the advanced decline oscillator, says that it still is sellers that really have control until price closes above 137.51. It's not there yet. I don't know if it'll get there. You're trading 136.88. Really, the structure of this market profile suggests to you and I, after those hammer candles, that the IWM wants to go explore the 138.45 level before tipping its canoe. This is Steve Rhodes with TFNN. We'd love to hear from you. You can send me an email. You can ping me in the den. But I'd love to hear your voice. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 57. S&P is up 10 points as we wait for the release of the Fed minutes out here. Now, one of the things that you and I like to do before a meeting like this is, just as we did with the daily charts, is go dive down into some intraday time frame charts out here to see if we can get a sneak peek. Maybe somebody knows something out here, and if they do, is it showing up inside of the showing up inside the futures market? Is it telling the future? So if we start looking for some of the signals that you and I form that work for identifying market tops and bottoms out here, let's go take a peek, right? So here we've got the ES Mini 30-minute chart out here, and what we can see is prices moving higher just fine, doing so with enough relative strength, so there's no type of divergent pattern that is out here. Prices trading above a 30-minute profile. That's good. It's above Stevie's red line, right about the 2370. Looks like maybe we're going to come down and test that here in the next couple of minutes. Only in wave number 5, potentially wave number 5. So I would suggest at least the way that the market would respond here is at least one more punch higher after the release of what the Fed wants to do. But it does not necessarily have to be wave number 5 we're in. It could be just the first wave to the upside. So what does this really tell us? It doesn't tell us a whole hill of beans. No, it tells us that at this stage of the game, there's nothing to the bearish side that we see out here on a 30-minute. The 30-minute chart has not tipped its hand as to how the market wants to react to the Fed release of what is going on. If I look at the Dow, we'll do the same thing out here. And typically, I like to get the info from the 30-minute time frame chart out here. This formed a nice little bottom out here. And as price came off of it, we're only in potentially wave number actually, we were in 6 on the ES. We're in 5. I misspoke there. Oh, let me do this here. Oh, goodness gracious. We are only in wave number 5, inside wave number 5 or 2, I should say, inside of the Dow equity futures. But it's moving higher with decent energy out here. No divergent pattern. It's gotten back to a previous high that in the past has stopped the momentum of price advance out there, but not really giving us any type of significant clue otherwise. So that's in the Dow. How about the weak link? We talked about the Russell 2000, the IWM, right? And in the case of the IWM, let's go take a look at the 30-minute on the Russell 2000 equity futures. Remember, there's a 10-minute delay here. So if you're looking at a live screen, consider this to be just semi-alive out here. Now, this one, if we were looking for a message from the weak link, this says that the market is going to respond positively. I know you're saying, how in the Sam heck can you say that? Well, remember we took a look at the ES mini coming off of its swing point low, recent swing point low. Same thing in the Dow. Now when we take a look at the Russell 2000, it has done that old recycle. It got to Stevie's key of G out here, wave number 7, and has now said, hey, sayonara, adios, I'm headed higher. And that would then go ahead and say the IWM would want to target, the 2 price areas that we took a look at. In fact, inside the Russell, on a 30-minute basis, this could be an A to B equals CD to the upside. If that were to unfold, just to give you the kind of price target out here, that would give you a price target, minimum price target, quite frankly, of 1382. 1387. Those would be the ranges. So if we're going to rely upon the Russell 2000 to give us a signal, it's already signaled that the market is going to respond positively after the Fed release of what it's going to do and so forth. Now, it doesn't mean that at the end of its trading session, see, I didn't use that end of the day garbage out there, but at the end of the trading session, it doesn't reverse, just says that it will want to go ahead and finish off that pattern. There are no other clues out here. What did I do with that chart? Oh, I'll be a son of a gun. I don't know what I just did with it. Huh, interesting. But that's neither here nor there. Right? I'm going to make sure I was using, I was using the return. Interesting. In any event, it has vanished from my screen. I must have hit the delete key instead. Okay, so Danny wants to take a look at notes. ZN, if we go take a look at it and try to get a feel for what it might want to do out here, we're just going to rely upon our TAS market profiles. All right, Danny, good with you? Good with me, so I want to make sure that it's good with you. And as we take a look at this, what we can see here is price has held, last 4 days, has been testing and in essence holding the bottom of its daily profile, that being 122 and a quarter out here. So what this says to me, Danny, now this market profile, the way that it's structured, it also suggests that sellers are the ones that are in control. So the real price area, Danny, and anybody else that is trying to track what the 10-year is doing, that you want to watch is 123 and a quarter, 123 and 23 out there, because that should be your resistance area out here. And the reason why I say it is sellers that are in control of this price range. Doesn't mean that price won't get up to that level. And I think that it very well may and should and could and would, is that when it gets up to that 123 and a quarter area, that what you would be looking at is that should be pretty good resistance. So if you see it close above that, then, Danny, the communication is you're seeing a change in trend take place. And then 125 area comes into play. Now, although you didn't ask for it, we'll go take a look and see if we have a similar message on the longer data, the 30-year out here. So let's see what it says. This is kind of interesting. Again, a whole different play, but there's a brand new profile that formed today. So, Danny, the interesting thing about the 30-minute versus the 10-year is that in the 30-minute, the profile that formed today, the structure is actually bullish. Yeah. So 147.28 is where it looks like it wants to head to, and I can't suggest that this is going to be significant resistance, just resistance out here. So watch the 147.28 area and how price closes or tests that level out here, because a close above that would suggest that the 30-year wants higher price out there. So hopefully that helps you out with regard to what's going on inside of Bundy land out here, whatever that means. Now, I know somebody must have sent me an email to say, when you get on with it already, please give us an update on Goldilocks and Hi-Ho Silver. So let's go do that.
And the GDX as well. I'm sure that email is in. And I don't mind those emails, by the way. It's just I didn't get to it just yet. But we're going to go ahead and get to it right now. So let's go take a look at them individually and try to figure out what the message is coming from us. So as we speak at 1:25 in the afternoon, it's not a really great message with regard to gold. Why do I say that? Because it is tinkering with the bottom of its daily profile, 1200.10. Now, we're trading at, what are we trading at? 1200.10. So it's not, somebody could say, hey, well, that's not so bad. It's trading right on the number out here. Well, yeah, maybe, but it's traded below that number for a good part of the day. And this is an area that has held that support. Hey, look, we can see that it did yesterday, no question. And if it does, then you're looking for a bounce to 1217. If gold today closes over 1217, then the call is this. The next leg to the upside has begun. Now, that upside might just be a consolidation kind of that we're in, headed to the 1265 area. So watch 1217, but watch 1200 like a hawk. You close below that. It's sayonara, baby. See Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So now here, back to Goldilocks just for a moment. If I take a look at the 30-minute chart out here for gold, what we can see here, so if we're going to look for similar patterns that have completed, the last time that gold formed a bottom out here, it did it singing in the key of G. You got to like that Stevie Wonder move. That was about 3 o'clock in the morning back on March the 10th. Then it moves higher, says, hey, that's a nice tune. I think I'll go ahead and sing in the key of G one more time, Johnny. That's at 3 o'clock in the morning, and this is on March the 13th. You got to like that. Well, a few hours ago, as gold was pushing down earlier in the day, when I say a few hours ago, I'm referring to the 10:30 time frame, it got to wave number 6. So it just seems to me what we're going to see here is at least an initial spike down below the low that we've seen today, forming the third key of G in a row out there. Now, maybe at that stage, that's what goes ahead and sets the next bottom out here. Where that takes us, I don't know. But I would be watching for that. So that's on the 30-minute chart here for gold. Let's go out to Oregon and speak with Rich. Rich, thanks for calling. Thanks for holding. How are you doing today?
Pretty good, Steve. Thanks for taking the call.
My pleasure.
I was looking at a chart of the IBB,
and
I was wondering what your take is on it. It seems to be going nowhere, really, and on decrease.
Yeah, are you in this? Tell me what you're trying to do here, so that I can even assist you further.
I've been in and out using the LABD.
Okay, all right. So here's what you and I know about the IBB, and specifically at this 301.80 area, which is where there was a swing point that formed back on September 23rd, and it did that with a little over 1 million shares, 1,064,000. So that's the swing point that Tom likes to say squawks, walks, and talks. So what we look for is what's price doing as it gets up into that area. Well, the first time up here was back on March the 1st, 1.8 million shares. So that was swing point was being hit with volume. So even though it rejected 301.80, said, hey, I'm going to be up there again. Well, the very next day it's up there, 1.4 million shares. Remember, it's really still going again, the 1 million shares. So it's back up there, says, I want to get up there again. The very next trading session on the 3rd, 1 million shares. So now you've got a similar price move, a million versus a million out here, and says, I don't necessarily need to get back up there and test it. In fact, it hasn't since that day out here. But on its pullback, which just took a couple of days out here, takes you into March 7th, Rich, pulls back with 1.8 million shares versus 2.5 million share day on February 27th out here. So in one sense or another, it just didn't have the gas to go ahead and torch this thing to the downside. And really, this is trading, as you said, in a narrow range out here. So what we know is only this. It hasn't been able to bust out the highs with volume. So you want to watch the 301.80 area, because if price closes above that, then you've got your next move to the upside out here. Likewise, on the downside, boy, you just need to see volume really come out of this. And I think that if you are neutral at the moment, that's the best thing to be in, because we don't really have anything. We don't have more of a signal. Now, what I think that we should do is always check the air up top. What that means is you and I should go explore what is the weekly chart giving us a message on. And so the week that began September 19th, 2016 at 7.5 million shares, when that was hit 3 weeks ago, boy, that was with 8.5 million shares. So that was hit with volume. Last week was 6.7 versus the 7.5. This week so far we're at 2 million shares. It's just not giving us the signal that it's done, it's tired, and it's ready to head south out here. I don't see anything more than a neutral signal. Does that help you out?
Yes, that's pretty much what I was seeing. Was it just seems to be bouncing around in here in the 298 to 301 area and just can't make up its mind.
Yeah, and the thing is, if this were just continuing to hit that 301.80 area with nothing but light volume, then what I would say, this is just communicating to you there's no way it's going to go ahead and bust it up. Not that it couldn't, but basically we would say, okay, all the testing to the upside, it's done. There are no sell or buyers that want to push it up, and this thing will do some type of retracement out here. And the area that I would be exploring for a retracement would be 281 to 287. But this thing really has to get some giddy up and go. On the trading session, Rich, on the trading day of March 7th, when it was able to close below its market profile, and that number you're looking at is 296.71. If all I had was that day, I would have said, look, it's coming down with light volume. Looks like maybe this will be able to get down to the 287 level because an area of support failed. But it got right back up there the very next day. So I just think in the IBB, you need to just sit tight, maybe go explore some of the top 10 holdings to figure out how they're doing and go. And that's the best call that I have right now. That's the best information as I see it. All right, my friend? Okay, you were kind of breaking up out there. So, but hey, thanks so much for calling. That was Rich in Oregon. The only other thing out here, it is significant resistance. As price was making that high, that punch higher on March the 2nd, it was doing so with less relative strength out there. And, so this 301.80 area is tough sledging. But boy, folks, if it closes above that, that's a very important bullish message, at least for the IBB. And then what you're going to do is you're going to target the 318-ish area, which is really the next gap to the downside, the next open gap out there. And then above that, you're looking at 338.32. So if you're looking for clues as the IBB communicating to us what the market wants to do here today, it keeps pushing higher with some volume out there. So thanks again for the call, Rich. Now, we were let's talk. So I went to gold and then, said, hey, I can see where you should anticipate a push down at some point in time after the Fed release to get to that seventh wave out there. So those of you that are especially intraday traders, that's what you'd want to be looking for. When it comes to silver, that's up about 4 pennies right now. So really, it's not doing a whole lot. But on the other hand, what is it doing? It's not doing a whole lot. I know I said that before, but here's the deal with silver. If you believe that silver is a leading indicator as to what metals want to do, then it's telling you it's going south. Why do we say that? Well, for the last 3 sessions, that is including today, it has not been able to get above. Well, it was able to get above the level the last 2 days, the level being $17 and a penny. We'll call it $17.02, but we have closed below that, and we are trading below that. So this makes 3 days in a row. And if ever there was a market profile that should have held their support, it's the type that show up on your screen that have the same center of the box or point of control as it does the bottom of the box, the one that says bottom D for daily, 17.01. That was a signal, should have been a signal that, okay, we're ready to rock and roll, we're ready to move to the upside. And the mere fact that that has failed is troublesome. Now, on the other hand, if price is able to regain that wall out there, because I know you bulls, you want silver on that wall, and it can close above $17.02 out here, there's no reason once it clears $17.23 that it can't make the run to 18 buckaroonies out there. Steve Rhodes with TFNN. Dow's up 45, S&P's up 9. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So Jill writes in, longtime listener to your show, love your show. I'm in the GDX. Can you give me your thoughts on the GDX? Happy to, Jill, and thanks so much for listening. So as we go take a look at the GDX, up 57 cents, about 2.5% as we speak today. Volume inside of this today is about 26 million shares. Yesterday, moved lower, tested a swing point from March the 9th that had 36 million shares, and boy, that was pushing lower with 80 million shares out here. Here, Jill, is what we know about the GDX. It's pushing into a swing point that it hasn't. Did it test it today? Yeah, it did. So it's tested the swing point today. Unlike the IBB, which was, in fact, did test the highs. Sometimes you never know if it's going to test the high, the low, or what have you. We do have a successful test of the GDX bottom, or the top of the March 9th candle session, 2155. That volume was 36 million. We're at 26,450 today. So in order to have a successful rejection of a swing point, technically speaking, shoot, I don't have that up on my screen out here. That's a bummer. I'll open it, but it'll take a few minutes for this little puppy to load out here. Where is it? Oh, there it is. You need to be testing that swing point with lighter volume. It looks to me like we still have volume, in essence, testing that swing point out here. So this would say to me, and the areas that you want to watch. Now, look, as a price exploration area inside the GDX, there is no reason for price not to try to explore and test 2256 to the upside. That is the top of its daily profile. The bottom is held. So you're pushing lower with volume yesterday. It held. Today it has held. And so does that mean we're ready to rock and roll to the upside? No, not necessarily. You have to clear resistance out here. It says support has held, but it's held it the wrong way, meaning you were pushing into it with volume out here. Here, as we take a look at Stevie's red line inside the GDX, right now priced at 2210, price needs to clear that area to at least turn its price oscillator up. That is the difference between two exponential moving averages, in this case here 19 and 39, and you can see it's below the zero line out here. Not a good deal. It's a good deal. It's a better deal if, in fact, you close above 2210. So you're long the position. What you'd like to see today is you'd like to see a close above at least 2210. 2256 would be even nicer out there. Then that says, okay, we're free of the traffic and we're ready to head higher. How much higher, you say? Well, the how much higher would take us into the 2361 level next. That would be your next area. What you don't want to see is a close below 2134. What you absolutely don't want to see, well, when I say you don't want to see it, it means you don't want to see it. That's a close below 2114. Now, what happens if that occurs? Well, you're so close to some areas of support out here that maybe it's not that big of a deal. It really depends on where you're in on this equity. But closes or breaks below the 2134 area says you're going to go explore 2032. 2045. And then what you have to be praying for is that you don't come all the way back down to this island bottom pattern that formed back between December 15th and December 23rd out there. So today's candle session, it's an inside day. It's not really providing you or I with a whole lot of information. So since you're already in this trade, what you really need to know is where your resistance is and where your support is. And from a long side, you want to see resistance broken. And from a long side, you do not want to see support broken. So good luck with the trade. I hope that helps you out. Just keep your stops in place, and you'll be just fine. Now let's take a look at some of these equities out here. I don't see any other requests inside the Tiger's Den. Steve, I missed the beginning of your show. Did you speak about the dollar? I do see another question from Maria. I did not speak about the U.S. dollar. Is that what you're referring to, Maria? Would you like to take a look at the U.S. dollar? I think the answer is yes, post haste. So let's go do that for Maria. Thanks for the question out here. So let me switch to this chart. Let me switch over to a different workspace, make it a little bit easier for me to do that. So we're going to look at the U.S. dollar two different ways, at least. So as we take a look at the current contract out here for the U.S. dollar, we can see that price has basically been trading sideways-ish to slightly higher, caught inside a little bit of a range out here, and the top of that range, in essence, lining up with your weekly and now currently your daily market profile. So the 102.03 area, 101.83 area, Maria, that becomes your go, no go point out here. Any close above those levels, we're going to call it 102.03, says the U.S. dollar will go ahead and explore the swing point from January 3rd out there in the 103.75 level. As far as support is concerned out here, the level of support that you would really be watching, in my opinion, is going to be the center of the weekly box at 100.618. I love it when that number 618 shows up, don't you? Hey, for all of you guys that are going, guys and gals, going to Clearwater this weekend, you know, if you were to go visit the office, you'd be going to nothing more sweeter than sweet 618. So here, what you'll be watching is the 100.618 level for support. That doesn't mean that you don't have support at 100.01 because you do out here. But are you in this trade via like UUP or something like that out here? This is not really providing you with like a ton of information other than what you can see. Okay, UUP. You can see that right now it's sort of been making higher lows. Right, so it's been making higher lows and slightly higher highs out here. And I think just like in Jill and the GDX, the best thing that I can provide for you is understanding where your resistance is at, 102.03. Any close above that says that the U.S. dollar index wants to run higher. Likewise, any close below, and really, it's not until you get below 100.01 does it give you some information that this thing wants to head much lower. Now, that is that message coming from this chart. If we put Stevie's other chart on the screen out here, let's see what we have with regard to the U.S. dollar index. Now, I don't have the current contract up, which you're trading. I've got the continuous, which is fine. 100, where we trade, 100.32? 100.32. So here's the bearish side of that message here, Maria, and that is that you can see all price has really done is come up and tested Stevie's red line out here. So that is your resistance point, which is basically the high of today's session out here. But I don't really have any other information. Anything else that I would give to you would just be, kind of like hogwash, and I'm not interested in passing out any hogwash. So I don't have any other opinion, don't see any other tool that you and I can use to figure out what the U.S. dollar index. Best thing is, if you're in the trade, is know where your support and your resistance is. So thanks so much for that question. Now, And folks, so go ahead and throw some more into the Tiger's Den out here. So I think we've beat this horse until somebody else has some other question out here. Let's go take a look at a couple individual stocks. So let's do that. Let's take a look at AutoZone. That is in the NFTD companies, right? AutoZone, whew, not a really good-looking chart out here. So what's this doing? Push it into a swing point from just a few days ago, back on March the 8th. 417,000 shares. You're down with 264 as we speak right now. Looks like AutoZone is going to go test the 705.30 level. Right now you're trading at about 714.57. We've got 10 minutes. That's the countdown. Actually, 9 minutes and 37 seconds until we hear from the Federal Reserve. Steve Rhodes with TFNN. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So Dow's up 46, S&P is up by 9. Soon enough, we'll know what the Fed is going to do, although most of us know what the Fed is going to do. But we'll see how the market is going to react, and you probably need a good hour or so before the market really communicates to us. Here's where we're at. Never before have we seen so many topping patterns in the indices, in the sectors. I'll give you an example. Inside the S&P 500, the three top sectors are the XLK. Here's the XLK. You've already confirmed that seventh wave move out there, so you know how the market likes to sing in the key of G, hit those notes, and then go ahead and reverse action out here. So you've got a topping signal out here inside the XLK. Inside the XLV, not to be left out, today's intra-session move higher takes us into wave number 7. Price is moving higher, doing less relative energy out here. So it has a topping pattern. If we take a look at the XLF, the financial sector, we covered this yesterday. This too has got two of those beautiful topping patterns, singing in the key of G, price moving higher, doing a less relative energy out here. You don't need me to go on. You've the three largest weighting sectors inside the S&P 500 giving you signals. Then we could go take a look at virtually all of the indices out here. Now, I say virtually because I have to exclude the semiconductors out here. The semiconductors are long and strong, and they can go ahead and pull the market to the upside out here. So there is no topping signal that has occurred. There's a warning sign, but there's no topping signal inside of the semiconductors out here. The Russell 2000, that's given us bottoming signals. So how do you play this? What do you do, depending on where you're at? Of course, I'm only referring to those of you that are short-term traders, because if you're intermediate and long-term traders, you don't do anything. You just listen to this show and the other shows, and you hear the daily stuff, and just to kind of understand what's going on in the markets from a noise standpoint out here. Intermediate-term traders, long and strong, is the only message for you. But with regard to everybody else, those of you that like to play things to the short side or what have you, at this stage here, I just think you have to watch yesterday's lows. If we see you close below yesterday's lows, then the first, not the only, but the first corrective period in 2017 will have begun, and that beginning date was March 1st. When will it end? Probably sometime in the April timeframe out here. But we'll just simply have to play that one thing at a time. So we've got our support and resistance areas for gold and silver, for the mining equities out here, for the U.S. dollar index. We know what to look for on a little bit longer term picture, daily. Did I say longer term? Not intermediate term out here, but kind of longer term for the next maybe a couple of weeks. And it's only if the lows of yesterday, not if they get explored, but if you see an actual close below them. And likewise, if all of these signals that you and I just took a look at, we didn't take a look at all of them. If you see closes, we move on to higher highs. The XLK takes out its high. The XLV just simply continues motoring on. The XLF takes out its high. We can go on and on and on out here. But I can't. I can only go on for like about another 20 or 30 seconds out here. If those highs get taken out, then the corrective process doesn't probably start until May to July. Yeah, May to July. We're only at March 15th out here. So we'll be back with you tomorrow. In the meantime, taking you into Fed decision time frame, Fed decision out here, we've got our favorite polar bear. That's Mr. David White. So stay tuned for his show. And, of course, you've got Tom from 3 to 5. He'll be able to tell you exactly what the markets are doing. Have a great day, and we'll see you on terrific Thursday. Have a good day, folks. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.